Hey everyone, welcome back to the channel. Are you looking for a way to make your money work for you even while you sleep? Today, we're diving deep into one of the most powerful tools for building long-term wealth: dividends. It's the secret sauce that many successful investors use to generate a steady stream of passive income. So, if you're ready to unlock the potential of getting paid just for owning stocks, stick around. So, what exactly is a dividend? Think of it as a thank you gift from a company to its shareholders. When a company makes a profit, it can choose to do a few things with that money. It can reinvest it back into the business for growth, or it can distribute a portion of those profits directly to its investors. That distribution is the dividend. It's usually paid out in cash on a regular schedule, like every quarter. Now, let's talk about a key metric you'll see everywhere: the dividend yield. This number tells you how much a company pays in dividends each year relative to its stock price. Calculating it is simple. You take the annual dividend per share and divide it by the stock's current price per share. For example, if a stock is trading at $100 and pays an annual dividend of $3, the dividend yield is 3%. This percentage is super useful because it allows you to easily compare the dividend income potential of different stocks, regardless of their price. A higher yield means more cash in your pocket for every dollar you invest. But remember, it's not the only thing to look for. The company's ability to sustain and grow that dividend is even more important. One of the most powerful concepts in dividend investing is something called a DRIP, which stands for Dividend Reinvestment Plan. Instead of taking the dividend payment as cash, a DRIP automatically uses that money to buy more shares of the same stock. This might not sound like a big deal at first, but over time, it's magical. It's the power of compounding in action. Your new shares will also earn dividends, which then buy even more shares, creating a snowball effect that can dramatically accelerate your wealth growth. Most brokerage accounts make it incredibly easy to turn on DRIPs for your stocks, often with just a single click. It's a fantastic set-it-and-forget-it strategy. Let's look at a real-world example that everyone knows: the Coca-Cola Company. Coca-Cola is a prime example of a dividend powerhouse. They have been paying dividends for over a century and, more importantly, have been increasing their dividend payment for over 60 consecutive years. This makes them a dividend king, a title reserved for companies with at least 50 straight years of dividend hikes. Imagine you had invested in Coca-Cola decades ago and reinvested all your dividends. The growth would be astonishing. This track record shows a commitment to shareholders and a stable, profitable business model that can weather all sorts of economic storms. It's this kind of consistency that dividend investors love to see. Now, we have a special segment for you. We sat down with financial expert Dr. Evelyn Reed to get her insights on finding the best dividend stocks. Welcome, Dr. Reed. Thanks for joining us. Can you tell our viewers about dividend aristocrats? Certainly, a dividend aristocrat is a company in the S&P 500 index that has increased its dividend for at least 25 consecutive years. These companies are typically large, well-established businesses with strong financial health and a history of steady earnings growth. Investing in them is often seen as a more conservative approach because their track record demonstrates resilience and a commitment to returning value to shareholders, even during tough economic times. So, how does an investor go about finding these companies? There are publicly available lists of the dividend aristocrats. You can find them on many financial news websites or through your brokerage. But don't just pick one at random. You still need to do your homework. Look at the company's payout ratio, which is the percentage of earnings paid out as dividends. If it's too high, say over 80%, it might not be sustainable. You also want to look at their debt levels and future growth prospects. The goal is to find a company that can not only continue paying its dividend, but also keep increasing it for years to come. That's fantastic advice. Thank you so much for your time, Dr. Reed. My pleasure. Alright, one crucial aspect we can't ignore is taxes. Uncle Sam wants his cut of your dividend income. The tax rules can be a bit complex, but here's a simple breakdown. Dividends are generally categorized as either qualified or non-qualified. Qualified dividends are taxed at the more favorable long-term capital gains rates, which are lower than regular income tax rates. To be qualified, you generally have to hold the stock for a certain period of time around the dividend payment date. Most dividends from major US companies will be qualified. Non-qualified dividends are taxed at your ordinary income tax rate. It's a good idea to hold dividend-paying stocks in tax-advantaged accounts like a Roth IRA. In a Roth IRA, your qualified dividends can grow and be withdrawn completely tax-free in retirement. This can make a huge difference in your total returns over the long run. So let's bring it all together. What have we learned today? First, dividends are a powerful way to generate passive income from your investments. Second, the dividend yield helps you compare potential returns. But remember to look at the company's health, not just the yield. Third, reinvesting your dividends through a DRIP is one of the best ways to harness the power of compounding and supercharge your portfolio as growth over time. And finally, be mindful of taxes and consider using tax-advantaged accounts to maximize your take-home returns. By consistently investing in quality companies that pay and grow their dividends, you are building a reliable income stream that can help you achieve your financial goals, whether that's retiring early, funding your lifestyle, or leaving a legacy. Thank you so much for watching. Building wealth through dividends is a journey, not a race. It rewards patience and consistency. Now, I want to hear from you. What are some of your favorite dividend stocks? Let me know in the comments below. And if you found this video helpful, please give it a thumbs up and subscribe for more content on building wealth. See you in the next video.